Welcome to the channel. I'm James, and today we're looking at eBay Inc., ticker symbol eBay, and they have just released their earnings right now. We're going to be going through them today and then giving my updated fair value of the company using discounted free cash flow and the Buffett-Graham intrinsic value models. Is eBay a buy or a sell in 2022? And then in the end of the video, we are going to be looking at some technical analysis. But let's get straight into it. What has happened with eBay? Well, we're going to touch upon the news, but you can see they're actually down 7.3% to $50 a share in the post market. It was $54 today, and this is the lowest it's been basically all year. So this is a new 52-week low. So let's get into the news. eBay shares slump 11% on Q1 revenue and earnings guidance, poor guidance, oh dear. Shares of eBay plunged as much as 11% in extended trading after the e-commerce company reported its fourth quarter in line with Wall Street's estimates, but issued revenue and earnings guidance that rattled investors. The company eBay reported net income of $645 million or $1.05 a share compared to $191 million, which is 85 cents a share, and revenue improved 5%. But let's have a look at the guidance. But the first quarter guidance for revenue and earnings fell short of analyst forecast. eBay said it expects $2.43 billion to $2.48 billion in revenue, while the estimates were 2.6. The company expects earnings between $1.01 a share and $1.05 a share, compared to $1.08 from FactSet. This is down 18% on the year so far. So poor guidance is what's took eBay down. But let's go through the financial statements right now. We have the 3 months ended on the left for 20 and 21, and then we have the year ended. So let's go have a look at revenue. You can see up on the quarter, 2.4 billion to 2.6, so that is good news, and beat last year's estimates, which was one of eBay's best years ever, 8.9 billion to 10.4. So overall, that is looking good. Let's have a look at this profit. So you can see here, if we take away the cost of revenues, the expenses, etc., we have the net income down the bottom for the quarter, 845 million. That has doubled and then some to 2 billion in 2021. But if we look at the year end, 5.6 billion to 13.6. So that is up massively from the previous year, up almost 2 times. Gives a earnings per share of around about 20, very, very high. In fact, you can see it here. Net income per share, $20.87, up from the $7.98 in the previous year. So that is very, very good to see. I mean, the company itself is a $60 billion company. To have earnings this much is massive. And next, we want to see if they're buying back their shares. Yes, they are. 710 million to 652. So they're buying back their shares, rewarding shareholders for holding on to their shares, which is good to see. Next, we want to look at is the free cash flow. Let's go to the cash flow statement. What is free cash flow? What is free cash flow? It's cash from operations minus capital expenditures. Let's look at the net cash flow from operating activities, this line here. On the quarter, it is down 293 million compared to 758, but on the year, it is up slightly with 2.6 compared to 2.4. CapEx is the properties of purchase and equipment, 463 million and 444 million, so that is down slightly. A large purchase of investments here, 32.8 billion in 2020, but that is down almost 10 billion to 22.1. So they're using their free cash flow for other things. But in terms of a free cash flow, this gives us about 4 billion. Sorry, not 4 billion, 2.4 billion or 2.6 billion in free cash flow if we take away these numbers. Let's go on to the free cash, my discounted free cash flow models, the Buffett-Graham intrinsic value. These are the first estimates. You can see they're a bit on the bullish side with 4 billion of free cash flow, and this is increasing pretty slowly, to be perfectly honest. The reason for this is analyst estimates on their revenue growth is pretty low and relatively flat, and obviously, as we saw from the first part of the video, they have missed the guidance is incorrect as well. The investors don't like the guidance, so they're expecting slow revenue growth. In fact, almost down from where it was in 2018. But let's see where this gives us. I think this will be a bit of a high value. Yes, $148 a share, which means it was growing up 5 times. I mean, eBay's all-time high, if we go back to the original chart, is $82 a share. And if we go back all-time, I don't think they've ever come close to that. No, that was definitely their all-time highs. So let's just quickly go back to here. So let's just say we're a bit more bearish on the stock. I think that this number on their net income was very, very high. So let's lower these as an average. What would this give us an average? That is about, what, 31%. Let's go a little bit lower. Let's go 27. This is now decreasing free cash flow for 2022. That would still put them undervalued at $71 a share, 71.71. So in terms of discounted free cash flow, they really, really, really like this stock. Buffett Graham intrinsic value. This actually likes the stock a little bit more. Earnings per share and growth rate is what this uses. And with those $20 a share, if we look at this, gives a fair value of $700 a share, which is a 1,100% discount. I don't think this is right. I don't even think this one is right. I mean, $71, it can probably get to its all-time highs again, but it did have a big push from the pandemic and everyone, using sites like eBay. But to get to $700 a share, I think Mr. Warren Buffett and Ben Graham are a little bit wrong on this model, but it does show that the company is still probably undervalued with these fundamentals. Let's just have a quick look at some technical analysis here. Obviously, with the last year, the price has dropped pretty steeply. The price is well below its moving averages here at $50 a share, actually off the chart right now. There it is. So what are we looking for here? Well, we've got a 50-day moving average in green, a 100-day in yellow, and a 200-day in red. The price is below all three of the major moving averages and quite considerably. So if you're looking to get out of this stock, well, you did have some signals earlier when the price crossed below there. Let's just have a quick look at some levels of support. This has been a previous level of support and it is broken below there. Next level is actually around about that $50 as well, which it is actually slightly below that as well. And then we have to go back pre-November 2020, which would be $45 a share. And the probably absolute bottom of this stock was the pandemic at $20 a share. Obviously, we don't want it to go to there. So it has broken through a previous level of support and is actually touching upon this one. So then the next drop below that could be that $45 a share, which would be a massive, massive blow for eBay. Next, what we're going to do is looking at the RSI and the MACD. Let me just get rid of these lines here because I have my free trading view, so I can't have too many of them on. Let's just delete these moving averages. And then let's look at the MACD. Moving average, convergence, divergence. What does this show us? Well, it shows us the momentum of the stock. Let's zoom into that year level. And what are we seeing? Well, once again, very bearish signs. The MACD and signal line have just recently crossed and are going to continue to drop because of the poor earnings. The price is going down again. And the lines are way below the zero line here. So if we look at this and a time to get out of the stock, you could have got out here when they did cross, and that would have been your sell signal at $73 a share, or you were shorting it, and you would have made a lot of money or avoided losing a lot of money on the way down. eBay has consistently pretty gone up and down, overall very bullish in the stock, but this was on a large run and is now dropping down. So let's just zoom out to the dailies. Yeah, this is the lowest it's been almost since the pandemic, and that's probably a similar story what I'll say on the RSI. So let's get the relative strength indicator up. What is this showing us? Whether the stock is in overbought or oversold regions, and currently it is trending towards oversold on the dailies. Not the lowest it's been. It was actually lower on January 26, but sentiment is quite bad at the minute. I also like to look at the weeklies, and there you go. That is actually quite a telling graph right there. It's in very oversold regions, almost the level it was in terms of the pandemic in 2020. So if you believe in eBay as a stock, this could be a great buying opportunity for you. Fundamentally, the company is solid and definitely worth more than its price. It's a 34 billion market cap. I said 50 billion before. That was mistaken. It was a 34 billion market cap, and they have, what, 13 billion in profit. Good revenues, good free cash flow. I mean, it looks like a solid buy based on the fundamentals, but sentiment is quite bad at the minute. Alright guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.